Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 124 for April 30th, 2020. This is a special Thursday episode. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be discussing your trade ideas. So I have arranged for Jake Bernstein to join us, and Jim, the option professor, and Jim will be moderating. So I'm going to go ahead and let him take it over now.
Okay, thanks a lot, David, and welcome everybody to the broadcast here today. Another active day in the market, and obviously a very active 2 months in the market as well. Today we have with us Jake Bernstein, who most of you know obviously because he's been in the investment business and advisory business for decades, written so many books on it as well, and is really well known throughout the whole industry and the world as somebody who really follows the markets on many aspects, including seasonalities and commitment of traders and cycles and all types of different ways of focusing in on the market. So we're very lucky to have Jake with us. For the people who are uninitiated here, could you give a background on yourself, Jake?
Sure, absolutely. So I've been trading for 53 years, I think. Yeah, it'll be 53 years. Started in the summer of 1967. I trade anything that moves, but I'm primarily a short-term trader. For investing, I do that on a long-term basis using monthly and weekly data, but all my trading is based on daily or intraday data. My methods are specifically and completely rule-based, no interpretation, no analysis, nothing like that. So the rules are completely algorithmic. They either are there or they're not. They're so easy, even a computer can do them. I do a lot of seasonal work, very specific seasonal work, which I may be doing a demo of today. But basically, like I say, completely by the rules, no interpretation, no analysis, makes things easy for me. I'm either going to be right or I'm going to be wrong. But the big thing that I do that's most important is I manage risk. So when people ask me what I do for a living, I don't tell them I trade. I don't tell them I run money. I basically tell them I'm a risk manager. My goal, get into a trade, get out of risk as soon as possible, and maximize profit, because that's the key. Essentially, 80 to 90% of your money is going to be made on 10 to 20% of your trades. So if you're not getting the big trades, there's a problem. So everything I'm going to talk about today is completely algorithmic, completely rule-based. But I think between the two of us, we've got a good interplay because you know a lot about the fundamentals and I don't.
Yeah, I'm watching a lot of the numbers that have to do with the fundamentals. What we're going to do, in addition to the stocks, though, we are going to go a little bit around the horn in the commodity sector because your experience in the commodity sector is extensive, and it would be silly not to explore that while you're here on the broadcast.
Thank you.
But let's go to some of these stuff. Yes?
I want to mention here too, real fast, that Jake is sharing his screen. So for the audience, you get to actually see what Jake looks at every day and how he sets up his charts and you know exactly what he looks at basically.
Yeah, and I'll be glad to explain it all in detail.
Yeah, sure. Well, let's start knocking some of these names off, and then we can get into other things as well. First one is Microsoft, which obviously yesterday announced earnings, and that cloud business just keeps going and going and going. And they did pretty good here today, but not too good because obviously it had already had a run up. So obviously, you know, maybe some of this news was discounted. But we're at 178 and change, I guess, on Microsoft, and it was up fractionally today. Yeah.
Yep. So let me just begin with the general statement, because remember that 80% of stocks move in the direction of the overall market. So if you're going to be a stock picker, you're going to be a lot better of a stock picker if you're picking stocks consistent with the underlying trend, with the major trend of the averages, such as the Dow and the S&P. If somebody would have told you 8 weeks ago, 10 weeks ago, that we would have the ultimate so-called black swan event, a complete collapse of the medical system, the COVID virus, shutdowns, sheltering in place, and I hope that nobody's touching their face. I haven't touched my face in 47 days. In fact, I haven't touched anybody else's face either. If someone would have told you that, you would have expected gold's going to go crazy, the market's going to crash. But nobody would have predicted a total collapse in oil, a total collapse in the stock market, a huge recovery in the stock market, and all the things that are happening. And the most disappointing to most people will be the fact that the price of gold did not go absolutely crazy. Yes, it approached its all-time high, but people will say, well, look, we've got all these black swan events, possible collapse of the economy, worst employment numbers since the Great Depression, unbelievable, terrible stuff. What happens to the price of gold? Goes up a little bit and does not remain up consistently. So keeping that as a backdrop, you have to remember that markets anticipate news and they don't necessarily react to news other than for the small trader. So we look at the indicators on my screen now. On the top of the chart, I've got my moving average channel consisting of two lines. This red line, a 10-day simple moving average of highs. The lower line, an 8-day simple moving average of lows. So that's my moving average channel. I don't do closing moving averages other than the relationship between open and closed moving average, because closing moving average is like the 50 crossing the 200, the so-called golden cross, or the 50 crossing below the 200, the so-called death cross. Historically speaking, it doesn't work. The accuracy is extremely low. So if you want 30 or 40% accuracy, I can do better by throwing darts. In the middle of the screen, we've got divergence, momentum, MACD divergence. Right over here, we've got the blue line, Williams accumulation distribution, and its moving average, 57, simple 57 moving average, 57-day moving average. So if you take a look at the chart, and this is Microsoft we're looking at, we had a new low in price right over here. And I'm going to put a line there because what I want to do is a little education as well as a little bit of technical analysis. If we go to the lowest price, put a line there, you can clearly see that the lowest price is not the lowest momentum. That sets up a bullish divergence, which then needs to trigger. Going to the lowest momentum on the chart in this range of 60 days, we go approximately to here. Let me put that in the screen for just a second. I don't mean to hog all the time. I'll be done shortly. The trigger point becomes the highest momentum between the two. And that high momentum is taken out one day after the low right over here. We've been in an uptrend ever since. So the real issue was not that the news was bad, not that the news was terrible, not that we were going to go into an economic collapse or any of that stuff. The fact of the matter is that when that low happened, we had bullish divergence suggesting the move was just about over. And in fact, it wasn't in one of the biggest rallies we've seen over the shortest period of time in history. So Microsoft remains bullish, coming back down to support, which is the bottom of the channel. Very bullish indication. When the channel opens wide like this, that usually precedes a push to the upside. So for example, when we opened the channel very wide over here, we got that big push to the upside. When the channel narrows, we tend to react to the downside. So Microsoft, still in a bullish trend, no change in that. And of course, Apple earnings are due after the close. They may be out now for all I know. We'll see how that goes. Now I'll shut up.
Okay, so basically on Apple, very still constructive. Obviously, is a company that has been fantastic for years and years and years. The next one up is going to be Apple, and let's see what that's doing here. It was up today $4, and
so the chart very similar to Microsoft, clearly in a bullish trend. Had a similar bullish divergence at the bottom, gave a buy trigger one day after the low. I'm looking at the after hours tape right now, and I don't see earnings coming across just yet. And when I do, I'll chime in here. So Apple's still in an uptrend, no question of it. And remember the characteristics of the channel. Channel gets narrow, market reacts down to support. Channel gets wide, market shoots up. And right now the channel is wide. Unfortunately, the Apple is at 292.76, so it hasn't changed from I don't think the earnings are out yet. So basically, the channel remains in a bullish trend, highest price we've seen in a long time, very close to challenging its all-time highs, and that's what Apple looks like right now.
Yeah, if you notice about the Google, Apple, and Amazon, Microsoft, et cetera, these and Facebook, these guys have tremendously high cash levels, which means they have a very good chance of obviously withstanding volatile times because of their cash hoard, and that's what makes them, among so many other things, very attractive.
Exactly.
This is one that I think is worth talking about from the standpoint of they're seemingly going to get quite a bit of competition. And although obviously they have a head start on popularity, maybe, I think Google, Facebook, and others are, even Microsoft is getting into this video conferencing game. And so that 180 price, this is on Zoom, ZM.
Oh, right. Let me get it up on this.
Yeah, that could have been a parabolic blow off if these other people are going to be competitive, because
Yeah,
there
and
goes your margins, there goes your people, right?
in terms of consistency, this has not been a very consistent chart. And of course, I think part of the problem there as a fundamental has been their security issues where people are getting Zoom bombed, and
Right.
that is not making people very happy. And there's more competition all the time. Are you familiar with the site Blue Jeans?
No.
Blue Jeans is another one of those conferencing sites used primarily by professional investors and corporations. They were recently bought by Verizon, but again, there's a lot of competition coming in this particular field, and so Zoom actually has given us a sell trigger here. Actually, not a sell trigger. It's given us an opportunity, what I call a CMC, one complete bar below the bottom of the channel in a bull trend, which means basically this: if we cannot get back into the channel tomorrow and we remain in sell mode on this indicator here, Zoom will actually give us a sell trigger for a substantial move to the downside. So be very careful with Zoom.
Yeah, again, the competition from the major players seems to be the one thing that I'd be concerned about, because that can cut into things. Advanced Micro Devices, they got hit a little bit, and some people were thinking in the low 40s, or maybe around, no, I'm sorry, the 50s would be a reasonable support zone, but that chart doesn't really conclude that. I don't know. Maybe it does.
Well, what we can do to get support on an intermediate term basis is go to a weekly chart. The weekly chart shows support at 44, which is the bottom of the channel right over here.
Right.
On an intermediate term basis, it's still in a big bull trend, reasonable and normal correction going on right now. If I was going to be a buyer as an investor, I'd be buying around $44 a share. But right now, on the weekly chart, it's still bullish. And of course, if you don't like the way the chart looks, change the time frame. So we get, here's our monthly chart going all the way back to 2015 or 2014, which is clearly in a great big bull trend. And for the ultra long-term investor, in the event we get another quote unquote black swan event, maybe the recurrence of the virus, and we take it down to $36 a share, or is that 38? Let me take a close look at the screen. $36 a share, which is this number right down here. That's where your big investment buy would be for the longer term. So right back to the daily chart. And what's next?
Next one is Boeing, and they just came out with a $25 billion offering in the junk market. That's one of the things with the Fed cutting these treasury rates down to zero. It has opened up the market for these people to raise money. Carnival Cruise, a lot of other ones, but this Boeing is raising money, which is supposed to be like a bridge amount to get them to the other side. But only time will tell if that's going to work. But it's been bouncing around.
The thing that's interesting about Boeing is this: if you believe that Boeing's going to go broke, there's going to be a lot of trouble everywhere. And so if you're an ultra long-term investor, by which I mean time frame of at least 3 to 5 years, and you're using the monthly data, that's what the monthly looks like. A complete collapse all the way back to levels seen since 2016, 2015. So you go to the quarterly chart, which is even longer term, and says basically this: you can buy Boeing now at close to levels that you saw in 2008 to 2010, which makes it an ultra good long-term investment. But again, you have to remember, what hat are you wearing? You want to be a short-term trader, or do you want to be an investor? As an investor, you're locked in. You can't even look at it unless you've got a 3 to 5 year time horizon. But on a daily, it's not a real pretty chart.
Yeah, the biggest thing that sticks out is you might have a reversion trade if things started to get better while it's still in a downtrend, because there's a lot of real estate between 130, 140, and where those moving averages were.
True enough. True
That
enough.
might be worthwhile. All right, what's a COUP? C-O-U-P.
Software, right?
I believe so.
I believe so, yeah. Coupa software. And again, a very consistent chart, giving us a buy trigger. Yes. Oh, Siri's talking to me. Just a second, please. Giving us a buy trigger. Ahead. Siri, shut up. Giving us a buy.
It looks like Amazon came out with their results, and they're down about 5% in the aftermarket.
I see it right here on the screen. Yeah, right. We'll take a look at the chart in a minute. So yeah, the Coupa software is still in a good bull trend. Channel again, always look at the channel if you like this methodology, which I happen to find very, very profitable. When the channel begins to open up as it is right now, after being narrow, I call it the horn of plenty, because usually, not always, but usually, we move sharply higher from there. Amazon down 16 bucks after market. And let's take a look at the Amazon chart. Here's the Amazon chart.
They're supposedly taking their first quarter of earnings and spending it all on coronavirus epidemic that has forced people around the world to stay at home. So they're
that's right. So here's the Amazon chart. It's trading right now, and let me look at the price. Hang on one second here. Because, okay, Amazon trading currently at 23.52. The bottom of the channel is 23.46. So it's just a little bit above support. And if you're the kind of person who likes to trade in the aftermarket, it's getting close to being a buy. And the way this market's going, you know, you're down $15 one day, you open $12 higher the next day.
Yeah, one of the big problems I had with Amazon up in this 2,500 area is that the 200-day moving average is way down at 1,800 and change, and that's a lot of real estate between the two prices. So, when it gets that kind of a setup, the yellow flag is generally out. You know.
True enough.
What about the 500 S&P 500? SPY in this particular case.
Here we go. Here's a spider. And again, nice bull trend. Bullish divergence set up and trigger the orange line at the bottom of the move. Triggered one day after the low, still in an uptrend. Let me show you something interesting. Let me see if I can get it for you. Hang on one second. I'm a member of the board. I'm on the board of directors for the Foundation for the Study of Cycles, which a lot of people may be familiar with. And we have just been publishing a bunch of research on our cycle analysis tool. This is one of the tools that we use. We take all the S&P data we have going back many years, we put it into a program called Fourier analysis, the spectral analysis. And the computer goes through all the data and asks the question, are there any cycles in the data that are worthwhile repeating or trading because of the fact that they've been so accurate? So we're looking here at a chart of the approximate 50-day cycle in S&P. And we project the cycle forward. And basically what it says right over here, and this is very close to real time, is right now in the last couple of days, we're making a high due to bottom again sometime in mid to late May, early June. So that's the chart right now. It's not been perfect, but it picked the low to within a day. Sometimes it'll be completely opposite, but if you use it with timing triggers, you're usually able to get most of the lows and most of the highs very accurately. So that's our cycle analysis work, not psychoanalysis, but cycle analysis. Mm-hmm. And we'll go back to the chart now. Here we go. And what's next?
One thing I did want to say on the Amazon, you know, when you get up to that 2,500 area, you know, that's not a bad time if you're an owner of the stock and you see the moving averages in the 180s, is to sell one of those 2,700 calls out of the money and take the premium and buy a put. And then at least you put parameters around your equity, as opposed to you just staying there like a tough guy and it goes down 73 points before you even have coffee tomorrow. You know?
Yeah, you want to take advantage of the volatility.
Yeah, because those premiums are huge up there. And again, the trees don't grow to the sky no matter what they were going to report,
True enough.
Anyhow, we are now, so on the S&P, I had a couple of questions real quick for you because, I've been looking at the 1 year, the 2 year, and the 3 year moving averages.
Mm.
And I went back 20 years. And what I noticed is in '01 and '08, all three averages crossed over and we went down. And it took a couple of years to get back above it. But in 2015, 16, and 2018, we breached the three averages, but they never crossed. And within 1 month, it was back above the averages and off to the races again.
Wow.
And so the averages come in now at 29.75 on the 1 year, 28.70 on the 2 year, and the 3 years at 27.75 ballpark. And we obviously got above the 3 and the 2, but we have not so far been able to get above the 1. And if we were to break under 28.70 and 27.75, do you think that going as far down as 2,400, 2,500 would be in the cards?
Oh, absolutely. Absolutely.
And do you think there's a probability of that occurring because this enthusiasm on this rally is not really being supported by fundamentals?
Well, that's true. But let me show you something that you might be interested in. I'm going to bring up S&P futures. One moment. And we're going to look at market sentiment. So on the bottom of the screen, the thick blue line is what I call the daily sentiment index. It's an index that we've been keeping in our office every day since 1987. And it's the assessment of the prevailing opinion, the majority opinion of small traders. We're talking about people who trade maybe odd lots in stocks, maybe 1 or 2 futures contracts at the most, minis, micros, etc. And so we assess their opinion every day. And we find the relationship is very interesting in an opposite way, by which I mean, the stronger the opinion of the small trader, the weaker the market's going to be. In other words, if the small trader gets very bullish, as they did over here at the top in this 80% bullish line, the market tends to go down. When the small trader gets very bearish, as they did over here, about 10% bullish, we tend to go up. Where is the small trader right now? So as of yesterday, the small trader was smack dab in the middle, completely neutral. Let's call it completely confused, not knowing whether to go up or down. This entire rally and decline has really scared the crap out of a lot of people because they don't know what to think. They're looking at the economy and they're saying the economy is the worst it's going to be since the Great Depression. Unemployment is huge. They look at the government, they see the government pouring trillions of dollars into the economy. They look at the market and they see it's up. They were scared out of their long positions at the bottom and now they're wondering what to do. So with the small trader neutral, I can't make a strong forecast either way, which basically means if you see the big breaks, you want to be a buyer. If you see the big rallies, don't trade those rallies, don't follow them, take advantage of them on a short-term basis. This has been one of the best short-term trading markets I've ever seen.
Mm-hmm. Yeah, this month has had the best record movement in things like energy stocks and banking stocks and housing stocks on record. So that just gives you an idea. If you bought the pain, you got the gain. Huh?
That's right.
All right. Well, what's on the coup here? We got Facebook, and we all know from Facebook they did very good yesterday, but they didn't really get the juice today that they thought they would. So what are we thinking here on Facebook?
The chart's still bullish. Every move down to the bottom of the channel has been an opportunity to buy. We've had our typical bullish patterns, which occur right over here and over here. We've had 2 complete days outside the top of the channel, which is a very bullish formation. So in terms of that, still bullish. I'm sure they'll have a reaction with Apple, whatever way those earnings go. But the bottom line is, I'm not going to stand in front of this train by being short. Rather take advantage of the opportunity to take some money off the table because that's the kind of market it is.
Yeah, it could be very much a range market where we could have seen somewhat of a high here recently, and then the support would be at some of those levels you discussed.
Now, one more thing, from a charting basis, when you see this kind of a breakout on the second day, closing lower than where you open is not a good sign. In other words, opening on this extreme strength over here, rallying to a new high for the day, and then closing below the open, not a good sign. It would be much worse if we closed on the low of the day, but right now, not a real positive development.
And the king of retail is down $75 in the aftermarket, so that's not going to encourage confidence too much tomorrow, I don't think. And then you got the weekend, and you got the weekend too. So
nationally, Amazon down 114 bucks if my quote is correct.
Oh, it's down even more. Yeah,
I'm looking at 23.5907.
Salesforce, obviously loved by all, even though it has a 786-to-1 P ratio. It is at about 161, 162. Salesforce CRM.
Wait, hold on a second. I got it right over here.
And
here's Salesforce again. Most of these charts looking very similar to one another, but absolutely not as strong as it should be. The only positive thing, of course, other than the fact that we're in an uptrend, is the fact that we've got this channel opening up again. And this opening of the channel is very important. As you can see what happened over here, the channel opened up wide. We got rallied very strongly. And this narrowing of the channel preceded this decline. So Salesforce, really not the best game in town, but certainly worth looking at support.
I was saying to a friend yesterday that if there is to be a W recovery, the middle part of that W has to start from right around here. So, in other words, we went down to 2175. We went back up towards 3,000. If it goes to 3,200, it's the V. And if it can roll down from here, then you got the shot at the W.
All I want to know is when I can touch my face.
All right, what do we got cooking here? TLT is the long-term 20-year treasury, and they made interest rates a joke again because they went with the formula. First you get the crash, then you make the savers lose all their savings interest, and then everyone goes to Tina and they start buying things because there's no alternative. So it's the same movie as '08, only on steroids.
Sure is. Really not one of my favorite stocks. I don't enjoy trading this one at all.
Yeah.
It's too erratic for me, too much dependent on Fed policy. So I stay away from it. A lot better things to trade to make good money the easy way rather than do it this way, which is a very hard way to do it.
Well, also talk about obscuring value through artificial means. If you saw the money supply jump 15 or 25% or whatever it has, and you saw the national debt go to a deficit almost $4 trillion, you certainly wouldn't think interest rates would be low.
Well,
so obviously, it's hard to trade if there's somebody who could come in and force the market down or use what the yield control curve or whatever they want to do.
True, and I think people really need to think about what kind of a trader they want to be.
Yeah.
Your time perspective. If you're a short-term trader, this has been an absolutely fantastic market. If you're good at picking support, resistance, and trend. If you're an investor and you're not following your rules, you've been killed to death. But if you've got a lot of money on the sidelines, which is where you should have some money right now, the opportunities that are developing now and will do so in the next month or two, probably going to be the best we've seen in a long time. But again, that involves making a forecast, and there's a lot of money to be made in selling forecasts to the public, but there's a lot more money to be made by being a good trader.
Right. And this obviously was just the trade that said that rates had to go down because of the economy to where it was and the debt levels the way they are. So if you were just betting that the rates would continue to drop, this was obviously the place to be. But when we go up to 180 on this thing, then you start wondering if, in fact, that might have been a capitulation maybe,
Yeah, well, certainly the volatility that we had after that has really been massive. Most people can't deal with that kind of volatility.
This next one is a consumer deal in athletic gear, I guess, Lululemon. And of course, this was a famous winner going from 128 this year on the low to 266. And then during the big collapse, you went from 266 down to 135. So half price sale there. And now we've had that throwback rally. But, is this another one that could be rolling over a bit from here?
I would say it's a good possibility to get support around the 218 level, 216 level at the bottom of the channel.
Mm-hmm.
Otherwise, it's been a very good looking chart. It's been very consistent with the indicators. It bottomed when it was supposed to bottom. But again, I don't really see this kind of a stock as, let me say one thing. There's been a lot of money made in trading cheap stocks with large positions. So for example, when you have a stock like Cronus, which is a marijuana stock, let me bring it up on the screen. And regularly, this stock is making moves of 40, 50 cents a day. And you can swing trade this thing from the bottom of the channel to the top of the channel for a large number of shares. That's really been the way to trade. In fact, it was the subject of the webinar I had a couple of weeks ago, and I will have another one on Saturday. Swing trading, short-term, low-price stocks has been a much better way to go for most people. And there's just a score of stocks that do this kind of thing all the time. So I just want to mention that because a lot of people are asking about these expensive stocks. Well, sure, they make big moves, but would you rather see a small move of 40 or 50 cents a day in a stock that's priced at $6 where you can get a huge position and a lot of liquidity and get out in and out real fast? That's what I enjoy doing in this environment.
Mm-hmm.
Okay, what's next? Apple.
Yeah, and you had some good opportunities there with some of the regional banks, which had a great month, and you also had them in some of the energy stocks like Halliburton, which went from $4 to $10. And so you're exactly right. And at your meeting, you're going to go over some of these opportunities like that.
Yeah, I've got some specific methodologies that we apply to stocks, and Halliburton is one that I've been trading. It's been a good move. And by the way, Apple's earnings are out, and it's up $4.75. It's up $5.60 now, trading at $299.10, up $11 right now.
Oh, good. That offsets the other one a little bit. Okay, so we went. Now we're looking in China now, and we're going to jump over to Baidu, BIDU.
You mean China?
China, yeah. The one who the administration is plotting their, what do they call that? Retaliation. That's what I saw on the news. We're going to retaliate against them.
That's right.
That's what we need.
So here's Baidu.
Mm-hmm.
And even though it's an expensive stock dollar-wise, it's had some very beautiful moves back and forth between the channel, top and bottom. So it's been a great swing trade if you like to trade that kind of stock. I don't enjoy trading these Chinese stocks because there's just too much possibility of news that we have no inkling of. The next thing that could happen in China, we probably won't even find out about it until 3 weeks after it's happened. So that doesn't really make me happy.
And that luck in coffee was not a good thing for people.
That's true.
Now you're looking at that chart. Obviously, if it got above that 105, 110 area, it would open up the door pretty good. Is there any type of technical indicators that give you an idea if there's a decent probability of it blowing out the 110, or is there just not anything that's kind of giving you that?
We go to the next hard time frame, and the next hard time frame gives us resistance at 109, which is the red line. So intermediate term, the trend is clearly down. If the trend is down, we want to sell resistance. If we want to sell resistance, we sell at the red line, which is 109. And Apple now crossed the 300 mark, up $12.73. So yeah, there's a good possibility that we get to the resistance and then we determine whether we're going to blow it out. Then we go to the next higher time frame, which is the monthly, which puts us at 123 for resistance. But clearly, without a question on the indicators, in a downtrend, I would not want to be long this stock.
How about throwing up BABA, B-A-B-A, because I know a lot of people have an interest in that.
Yep, let's go to Alibaba. Here we go. And we'll start with the big picture. Bullish trend, intermediate term picture weekly, right up against resistance and failed. The daily chart, failing at resistance, a little bit of support right in this area.
Okay, next one up is telephone, T.
Yep. Here's AT&T, and here's the charts. Not too exciting.
No.
Not bad from the perspective of a short-term trade.
Kind of range bound, so you could kind of play the window of 28.32 maybe, huh?
Correct.
VXX is your volatility, right?
Yep, I'll bring that up in a second. I'm just going to take a couple of seconds here and put it in order on another screen. It'll only take me a moment.
Yeah, I thought this 30 number on the VIX was very key. In other words, if this thing is topping out temporarily in the 29.75 area by that 1-year moving average, and the VIX is down at 30, and the VIX is going to have a difficult time getting into the 20s, then that would be another factor that could give you maybe an indication of a turning point as well.
And here's the VIX coming right up. And the VIX, technically speaking on my work, is in a downtrend, which would be expected because it would usually work the opposite direction of the overall market. So still in a downtrend here with very clear support and resistance on the chart. One thing I want to tell people is this: don't, no puns intended, don't discount the airlines as a possible long-term investment. Probably not all of them will survive, but there are some good ones out there.
Yeah, and talking about inexpensive stock, you know, I was doing trading in JetBlue. That was very cheap.
Right, one of my favorites.
And also American Airline, right? That was pretty reasonable price.
Trading that one very actively as well. Here's the JetBlue chart.
Yeah.
Again, it speaks to the, let me get my stuff off of here. It speaks to the idea of this lower priced stock where you can trade a large position. And because it's got good liquidity and the fills have been great, you can put in a bid and an offer and get filled right within a matter of seconds. So I enjoy that.
All right, the last one on the list is PAYC.
PAYC. Is that Paycom?
Yes.
Here we go, PAYC. And this is a very bullish chart. The fact that we broke out from the top of the channel, the fact Williams remains above its moving average right over here. Let me move my screen right over here. The fact that we had a very large range day breakout to the upside, very significant buy indication on this chart. And again, I don't enjoy these expensive stocks dollar-wise because they don't give me the kind of movement I like to see. But that's all right. We can still look at anything people want to look at.
Yeah, these are expensive stocks, no doubt about it. Let's swing over before we run out of time here to some of the commodity area, and maybe we can get an idea of what your feelings are and the commitment of traders and seasonals and things like that. And maybe we could start out in the area of agriculture and see what you're thinking currently in the grain area, because I guess corn got beat up a little bit because of oil going down and the ethanol story, but now it's got some legs. And then the beans got some legs today. It'd be very interesting to hear what you've got to say on beans going into the summertime.
Here's our corn charts showing a whole lot of stuff on corn. The red line is the cyclical pattern in corn, which has been about 5 to 6 years, going back over 100 years. It's not perfect. It was due to bottom right over here, so it's a few months late. But the green part over here indicates commercial buying, which would mean professional buying by grain processors, Kellogg's, General Mills, and so forth. And at the bottom of the screen, the small trader sentiment, the lowest it's been since 2014.
Right.
So this combination, professional buying, overdue cycle low, small trader negative, is a perfect combination, which basically says, at the very minimum, you don't want to be short this market, but you do want to be looking for a place to buy it. Let me show you an interesting chart, one that most people have never looked at before. It's this one right over here. I'll put it on the screen. And that is soybean oil. Soybean oil chart is really beautiful. Let me change this time perspective a little bit here, just one moment. Shrink the chart a little bit. This great big blue cycle, a low, a low, a low, a low. It's been perfect for many years. And you've got big professional buying right now. So who are these professionals? The grain companies, Archer Daniels Midland, Bunge Grain, the Andersons. When prices get this low, they start to buy the stuff and take delivery. Then when prices start moving higher, they get rid of their positions, start to sell them out. This is very important because even though most people have never even heard of soybean oil as a futures market, it's a great little investment market. Let me just show one more and then I'll let you have it back. Check this one out. Check this one out. Here we go. This is a market that I have not traded in probably 30 years. believe it or not, orange juice. Look at the red cycle. It has been as close to perfect as you can imagine, by which I mean the lows come on time, the highs tend to come in the middle, not perfect, but very, very favorable. But here's the thing that's really interesting. If you look at the chart, and you look at the history, ask the question, all of these points indicate commercial buying of orange juice futures. They buy frozen concentrated orange juice and they take delivery on it. With only one or two exceptions in the entire history of the Commitment Traders Report, have they been wrong. They're almost always long, either at the bottom or ahead of the bottom. And right now, for the last year, they've been nothing but buyers. So the overwhelming majority of commercials in this market, the biggest one of which is Coca-Cola, because they own orange juice, they own the Minute Maid, has been buyers. So if you like this kind of market, and unfortunately I don't because the trading activity is very low, you can get some bad fills, but this is predicting a big move up. So why would commercials be buying orange juice? Well, they know something. They can afford to hire the best weather people in the business, get those long-range weather forecasts to determine when there's going to be a frost or a freeze in the growing areas, or whether there's going to be disease. They buy it, they hold it, they buy it all the way down dollar cost averaging, then it explodes, and they sell it out to the public. So this is a really good one to look at. And I'm going to let it go back to you.
Well, can you just throw the soybean up? Because my feeling has been is that $8 beans will be ultimately 9, 10, or 11 possibly because of supply change, because of weather, because of I guess the oceans and stuff are very warm, so we could have some volatility there, and just simple demand coming back in, maybe from China, who knows. But you know, you can't get to 9 unless you can get through 860, 880, 9, and 950. And so the bottom line is from your work, does it look like we will be able to stay above 8? And maybe today's move might be the beginning of something, up 15 cents today?
It's about time.
Yeah.
You know, the bean market has been basically moving sideways for several years.
Yeah.
The ideal cycle low is right now. That cycle low is preceded by very heavy commercial buying and another wave of commercial buying right over here. So with the public very negative, farmers very negative, all of this food that they're harvesting and can't really deliver because of the COVID virus and all the rest of that crap, adds up to a very bullish scenario. A lot of professional traders are just waiting to jump on this bandwagon. It hasn't happened yet, but I think you're right. It's due to happen. And the cycle low is being made right now. The midpoint of the cycle comes here, but remember, cycles are not symmetrical. So we're not looking at cycles for tops. We're looking at cycles primarily for bottoms, and there's a great opportunity here. Can I show you one more?
Sure.
Check this out. This is copper. And if people catch my drift and understand what I'm saying, you look at the chart and ask the question, what is commercial activity in copper right now? Commercials are buying copper. Not only are they buying copper, but recently they bought the largest amount of copper, second largest amount of copper in history. So who are these commercials? These are primarily end users. So who's the end user of copper? Wire manufacturers, heavy equipment manufacturers, and most of all, China. So basically what it's saying is this: China is taking advantage of these low prices in copper, relatively low prices in copper, and sometime over the next year or so, we're going to see a big up move. Well, the thing that's interesting about it is this: we've got Southern Peru Copper, SCCO, BHP, Rio Tinto, FCX, Freeport-McMoRan, COPX, the copper ETF, and others that are not only positioned to take advantage of these big moves that are coming in copper, but in addition to that, some of them are yielding 7, 8, or 9% because they have political risk. Some of them are located in countries that are politically risky. But if you're looking for an investment that's going to return some money while you're waiting, that's the place to be. And the thing that's interesting is this: you watch TV, they're talking, you've got to own copper, you've got to own silver, you've got to own gold, it's going to go crazy. Nobody's talking about copper on TV. It has no sex appeal. They want to buy silver and gold, but copper as an investment with those ETFs has really great potential. Now, apparently Apple has reversed its trend. Now it's only at 288 after hitting 300.
Well, I'll tell you the other thing that might be supportive to the copper idea is ITB is the home construction
Right.
ETF, and it has gone up 72% from the bottom.
Right.
And I don't think that would be negative for copper, since copper is being used in wiring and stuff like that, right?
ITB, XHB, those are very, very good ones for the longer term.
How about we put crude oil up there, and you can explain how it's going to go minus $55 this month.
Here's the crude, and here's the interesting thing about crude. I'll show you in a minute. Okay, so here's the crude. The crude cycle's clearly been down. It was projected to bottom about 5 months ago, which is fine because cycles are not perfect. There will be a low in crude oil, but I'm not interested in crude. This is the one that I'm interested in right now, and I'll show you. This one is absolutely beautiful because people don't understand it. Why would natural gas be bottoming now? The natural gas cycle has been one of the most predictable cycles that we have. And guess what? Commercials are now buying, and just recently bought, record high amounts of natural gas. So why is it that during this great big bull market, this great big bear market, commercials have been mostly long natural gas for many years? Easy. They can take delivery, they can immediately take that cash product and sell it on the retail level and lock in profit. That's not possible to do with crude oil because of all the different markets we have all over the world. Natural gas is natural gas. It's not Brent. It's not light sweet crude. It's not Brent. It's natural gas. So they can make money on it, and they're expecting a big bull move, and we are too. So watch this one rather than crude.
Let's throw just a couple of stocks up, Jake, that would be corresponding to both oil and natural gas. On natural gas, put up LNG, because it's gone from $25 ballpark area up to almost 50 here in the last month and a half. So somebody must be bullish on natural gas, huh?
Let me get that on here right now. Just one moment, please. Here we go.
Yeah.
LNG.
LNG. There you go.
Very beautiful chart. Really beautiful.
I mean, you know.
Very consistent.
Yep.
Easy to trade.
Mm-hmm.
Clear signals. Bullish divergence set up and trigger at the bottom. Just crossing above its moving average right over here. And Williams, all systems could go considerably higher. And there's some cheaper ones as well.
Mm-hmm. How about WPX? That was something that Leon Cooperman was on TV saying that he was buying their bonds. I think they're double-digit type of, current price on them. And it's an inexpensive stock. But according to him on TV, he was saying they can make money at these lower prices on oil. So
yeah, they can absolutely. Yeah, it's a good-looking chart as well, and it's in the kind of price range these days that I like to trade large positions.
That's why I thought it might be worthwhile for you to be aware of that one. Huh?
Absolutely. What else you want to look at? What else you want to look at?
Oh, I thought somebody else said. How about those metals? Hey, we can't go home without the metals.
Okay, we looked at copper. Let's look at the gold.
Yeah.
Here's gold. Again. And here's, let me get the right chart. I'm sorry, I got the wrong chart. Hang on 1 second.
Gold's a tricky one, isn't it?
Yeah.
I'll tell you, one of the things I find it tricky is the gold shares, like in GDX, is in the 30 area, trying to make new highs, right? But when we were at 1,800 back in 2012, this stuff was at $70, these gold shares.
Yeah.
And they cannot really get going. So I own some stuff, full disclosure, on the gold shares way lower, but I would love to double up and get heavy on it. But I'm trying to prove that this rally is going to be sustainable. And when I see that the gold shares are lagging so far behind, and $135 premium on an American Eagle coin over spot,
yep,
that tells me something weird is going on, and I don't want to put more money into weird.
I totally agree with you. You know, what concerns me is the fact that people are watching TV, they're sitting at home, they're seeing all these commercials for the gold exchange and this kind of gold, silver, and bullion put your money into a gold IRA. Silver is going to go up. It's going to increase tenfold. All these things concern me a lot. And especially when you get, as I said earlier, one of the biggest, if not the biggest, recent black swan event in history, and gold basically sits on its ass, I get concerned. That kind of news should have blown gold up right through the all-time high, but it did not do.
Yeah, I mean, like I was telling people on the gold GDX, if the former high is 70 and the thing's trading 30 to 34, even if you waited till 38, if it's really got the potential to go back to 70, there's a lot of real estate. But what you don't want to do is get caught holding the bag.
Right, and you know, the thing that's really, pissed me off is these gold ETFs like JNUG and NUGT that have been split, reverse split, reverse split, reverse split. They're going to reverse split them out of existence.
Mm-hmm. The other thing that's interesting that I heard, which would not surprise me, is one of the reasons, obviously, you're at 135 premium over spot on the coins, is people are hoarding the coins. And so the key would be is if, you know, there's a record amount of outstanding shares on GLD. You know, if in fact these people said, listen, I'm not rolling them like they weren't doing with the oil very well, could you possibly get a squeeze in gold that the B of A is looking for $3,000 gold? Obviously, how would you ever get there? Well, you could if everyone said, I want delivery on the front month, and they couldn't bring it in because of whatever reason.
That's true. You know, the other side, no puns intended, the other side of that coin, I rarely tell people what I do. I'm living up here in the mountains. People don't know what I do, but every now and then somebody says, hey, I heard that you know what you're doing when it comes to trading and investing. I say, well, yeah, I'm not going to give you any advice because if I'm going to give you advice, I'm going to charge you money and you can't afford to pay me. So the bottom line is people call me up and they say, should we buy gold? I say, why? They say, because I just heard that there is no gold anymore. There's no gold available anywhere. Well, when you start to hear stuff like that.
Yeah. That's not the bottom.
Yeah, right. Exactly.
What about the white metal silver? Let's see if that has anything going. I've been seeing it having a hell of a lot of trouble getting above 1650, and
yeah, with the silver.
If it can't get above 1650,
it's had a lot of trouble here, and especially to have the large range day that we did today, and last bar in the chart is today. Big outside range day. We come all the way up to where we were a few weeks ago, and then end up lower on the day and toward the low of the day. Not a very pretty picture. And again, I want to put it in the backdrop of the fundamentals, which I'm really not much of a fundamental trader, but again, you have to ask the question, what have we been hearing all these years about these black swan events? Worst unemployment in history or since the Great Depression. Yeah. Why isn't silver going crazy?
And the thing is, it's just not happening. And again, you know, the drum is beating quite loud, you know.
Let me show you something interesting. I'm going to go back to the commitment of traders chart. This is very cool. So where the hell is that chart? Right over here. Okay, we're going to go to the silver chart. I'm going to show you something, like I said before. Come on, computer, cooperate with me. Just hang in there. I'll get to it.
And then one last thing we could maybe close out on is the currency. How's that U.S. dollar looking? For me, it's just flat as a pancake at 100, but it's going to not stay at 100 forever, more than likely. So maybe we could look and see if there's anything there.
We can do that. Here's silver. And here's the silver chart with silver cycles. Now I want you to look at this right over here. This little teeny weeny little blip right over here. This little green blip. I'm going to expand that to weekly chart so we can see it better. There's that little blip. And you'll notice that it came about 5 or 6 weeks before the bottom and before this percentage-wise big move up in silver. This was the first time in the history of silver, the entire history of silver, of the COT, that commercials were net buyers of silver. And isn't it interesting that they did it about a month and a half before the bottom, before this big move up? The question now is, where are the commercials? They're nowhere to be found. They're not interested in silver anymore. Not that we need them. We don't need commercial buying activity to give us a big bull market, but it certainly helps if you're bullish. And at the same time, we saw the same pattern in gold, platinum, and silver, and copper, all at the same time. And you wanted to look at the dollar?
Yeah, We can either look at the dollar index or the euro and the yen, which are the two main ones.
Here's the dollar index. And you'll see the dollar index is due to make a cyclical high. Let me go to the monthly charts. And you can see that commercials have got no interest in being long the US dollar at all. And I would say again, based on the interest rate relationship in the United States versus foreign countries, the dollar is probably peaking, or it has topped, at least on my work, that's what it says.
Yeah, the yield advantage that they had when we were 3% on the 10-year obviously has gone the way of the buffalo.
Exactly.
So, all right. Well, I tell you what, we went over a lot here today, and I think everyone's very lucky to be able to get a little of a peek at some of the technical analysis you do. And I think the main thing is people should try to find out now how to hook up with you and look at what your research can bring to their table, and how they could benefit from all the extensive work that you do. And you've only just scratched the surface. There's quite a bit more that obviously in this short dynamic we can't go through. So how can people get a hold of you, Jake, and take advantage of what you're up to right now?
Just go to my website, jakebernstein.com. Check out the announcement on my webinar this coming Saturday. Very specific strategies, rule-based for trading, cheap stocks, short-term for big bucks, or anything else I've got on my website. I'll copy the newsletter, whatever, no problem. And thanks for the time.
Oh yeah, this hour is always one of the big pleasures of my time. So I very much appreciate you taking your time to try to help others, which is a good thing. As far as myself is concerned, I do have a weekly update that I come out with, giving you my views on all the different markets. To get that update sent to you by email, just shoot us an email at optionprofessor@gmail.com. We'll put you in the queue and we'll keep you informed on our point of view. Right now, I'm going to turn it back over to David Kosmider. And again, I would like to thank Jake Bernstein for being with us today. It's always a pleasure, and we can't wait to have you back.
My pleasure.
All right, thanks, guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network or app. Or you can also go to TimingResearch.com to get access to the recording of this show as soon as I can get it posted, or any of the past shows as well. Also, just a quick announcement. Be sure to mark your calendars right now for May 19th through 21st. From 9 a.m. to 7 p.m., I'm putting together another big Synergy Traders event. So this day, or for this one, we're going to have 30 different lessons over 3 days. And the first day, Tuesday, will be stocks and options. So Jim will be doing a presentation then, along with 9 other presenters. Thursday will be futures, and Jake will be doing a presentation that day. And Wednesday will be Forex. So a different theme each day, and we'll have 10 great presentations each day. So like I said, be sure to mark your calendars, and you can always access the live events by going to TimingResearch.com/live, and you can join us for that. So I just want to thank my guests again for today, Jake Bernstein of jakebernstein.com, and Jim, the Option Professor at optionprofessor.com. Thanks, everyone.
Thanks, David.
Yeah. Don't touch your face.
Yes.
Or anybody else's.